Hi guys, 26th of June, Monday. MBA with Cal once again. All right, very scary divergence between the KBW Bank Index versus the Dow Jones. This is one video you cannot miss because it's so important. Things can get very scary. Either we're going to see a massive bull market or we're going to see a sell-off that's going to freak everybody out. So let's go into details. Let's go. All right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, let's talk about what happened over the weekend. Okay, the mutiny in Russia right now. Putin is pissed. All right, definitely think about this. One of your favorite guys had turned against you. That is not something that Putin wants. And I'm pretty sure Zelensky is going to be popping some champagne, having some great burgers right now. Right? Apparently now the Wagner group is actually taking over the city, and of course this is pissing Putin off. All right. So what's the main reason, right? Because right now, seemingly, some people are not very happy inside Russia, okay? It is the government itself. And of course, this Putin already say that we will protect our people and the statehood from any threats, including internal betrayal. And that's what we are facing is betrayal. Oh gosh, okay? He's accusing Wagner mercenary group leader, all right, for attempt at an armed mutiny, all right? So of course, this is something that was created back in 2014. And of course, they have more than 50,000 recruits back then itself at peak. Yeah? So all this actually is happening right now. So the question is this, is that going to be telling us that this could be the end of the Russia war between Ukraine, or this is just only one little fiasco that will happen and go later? I don't know. But the thing is this, definitely that created a bit of movement over the weekend. But before that, I mean, that was called a futures breakdown a little bit. But of course, towards the end, we were thinking, hey, come on, this could actually be a good thing for Russia. Sorry, for the rest of the world, in a way, for Ukraine. That's why the futures recovered back this morning. All right. So let's us see more on this later on. All right, moving on. All right, let's discuss what happened last Friday. Okay, so the thing is this, the Dow Jones dropped by 219 points, the NASDAQ down by 150, the S&P down by 33. Now, last week, and I've been telling you guys this to be very careful, the US market last week, and truth be told, everything happened according to plan. Congratulations to those who actually traded together with us. Now, of course, Microsoft down by 1.38%. Google 0.66%, and Amazon down by 0.63%. The one big movement is Tesla down by 3.03%, down to $256. Now, just a couple of days ago, many people were looking at 300, 350, even 500. Well, I came in and I said, look, this week itself, let's take some profit, and truth be told, it came down. So if you want to buy some Tesla, maybe wait for 1 to 2 more days, then maybe that will be a good time to buy some Tesla. So let's look at what CNBC had to offer. Stocks tumble on Friday. Nasdaq snapped 8-week winning streak. All right, so end of the 8-week winning streak. Yeah. So the thing is this is because probably the market went out steep because the market has been pushing up for 8 straight weeks. Right. So nonetheless, all right, overall itself is still very positive for this year. Everything looks good. And basically now everyone is again coming in and exhibiting the renewed fears of the US recession and as well global recession. Now, this is something that I've been saying. I've been repeating myself like a broken recorder. I believe that there will be a global recession by August to September of 2023. I've given a lot of videos on this, so I'm not going to go back in again. But the thing is this right now, even Goldman Sachs shares came off because of a huge write-down of the 2021 acquisition of Green Sky, all right? But the thing is this, more important is the banks will be the key thing to watch out for, and that's why today we talk about KBW coming on. All right, so for us as well, right, since 1 week ago, when the Dow was surging higher, we mentioned that by the 13th to the 15th of the month, okay, of June, remember that? We said that this is a period of time the market will likely peak, and truth be told, the market really peaked and the Dow came off quite a fair bit. And of course, we shorted the market and we added position along the way, and of course, we profited. Congratulations to those who follow through and those who have profited the market. Well done. We should do some charity work very soon, yeah? Okay, so this is how it works here. We really trade for a living. We don't really rely on causes to survive, but more important, we want our students to profit from the market, and hopefully you will join us too. All right, so let's look at what is the main reason why the market pulled back. Now, apparently, as the AI wave, I told you guys will take a break. Truth be told, right? I told you guys the AI wave will take a break very soon, and truth be told, it really came down. Like this guy, C3.ai, trading about $48 in the peak, came down all the way to $33, basically cutting by 1/4. So is this a time to buy this counter? Well, I think you can try when it hit about $27 to $28. Then probably that will be the first base, and then the market might be going back up again. Now, based on the indicator wise, it's all right. If the RSI can go down to about the usual 30, then that's a good idea. To come back down the moving average about 20, I think that'll be a bit of far-fetched, but again, anything can happen in this market. This is something that happened back in 1999 when everybody was going crazy on .com, and of course, shares goes up like crazy, and then came back down as fast as it is. All right, so of course, the main reason was Deutsche Bank reiterated a sell after the investor meeting because this company gave no idea of what will happen in the future. They only know that, okay, this is going to be an AI project, it's about AI and AI, but there's no fundamental, no concrete numbers. Basically, it's just plucking numbers from nowhere. And that's the reason why Deutsche Bank decided, you know what, let's take a break on here. Now, this company that I'm pretty worried, and I've been saying this for the longest time, is Lucid. All right, this car company basically itself pump up all the shares up to about $18 back then from a low of $8. Then after that, I remember I tell you guys, if this counter cannot stay above $12.91, it will come down. And true be told, Lucid share kept coming down, and in fact now basically new year low itself. Now current price of $5.47. There is a very high possibility that this counter can really even see $4 if they don't get the lifeline from Tesla. Why? The main thing is this, because Tesla hasn't joined in the adopting of the Tesla charging platform. Now, several EV companies has done that already, so that's why their share price happened to be stable, but Lucid is inside there. So it could be the personal relationship between Peter and Elon, because they are not the best friends. So of course, this is one of the possibility. So to me, it's all right. There is a small possibility that Lucid may go bankrupt if they don't get enough financing and the share price kept going down and margin call continue. Who knows? All right. Now, have stocks actually absorbed the rate pause? So the thing is this, people are now speculating that maybe it's time for the stock market to continue its rally, because apparently now the market accepted that even as a rate high in July is okay. So of course, people says that, but the stock market come off, right? So what do you think? So you can see right now the smart money are buying into the market. Now the smart money is buying a lot in the market, and at the same time, the US S&P 500 is moving higher. So that's the reason why we are saying that maybe the smart money are better and smarter than the hedge fund, because the smart money now are getting out from the market. But let's just take a look over here itself, guys. When the smart money gets out itself, usually you can see that the market do slide quite a fair bit. So if you ask me, based on the last whole year movement, this is the worst time to enter the market if you believe the smart money are smarter than the retail, because that means that there's a good chance there should be some selling wave coming soon down the corner. All right, so JP Morgan actually says that the retail investors and traders have enthusiastically invested a staggering $4.4 billion in equity within the last week itself. So that is the reason why this is really remarkable, because the boys are selling, the retailers are buying. And definitely, right, think about this. Goldman Sachs have just stated that 9 of the last 10 trading days, the hedge funds were dumping shares. So if they are dumping and the retailers are buying and the market is going up, is it because the retail is smarter, or is it because this is the final wave? All right, so apparently now we all know that there's a short squeeze again recently. All right, a lot of short sellers down. I think there was a report saying that nearly $15 billion was lost on Tesla alone. So maybe overall itself, that is the main reason. But again, after a short squeeze, usually things will go back to normal, and that's where market will likely take a break. And at the moment now, the equity risk premium is at 20-year low, whereas the risk earning is 20-year high. So again, what does it mean? If you look back again, back in 2008 and 9, that was where the risk premium wasn't really equivalent to it. And of course, right now, people are getting a bit worried and see that whether this will be a repeat of 08, 09. Now, remember the time whereby this happened. Okay, now recently, Jerome Powell kept on reiterating that the banks are sound and resilient, it's good, no need to worry. Secretary Janet Yellen says that the banking system is sound, all is good. But of course, when they remember the time whereby this Ben Bernanke also came in and said that the subprime mortgage wounds won't seriously hurt the economy back in 2007. And of course, the thing is this, everybody has to protect their position. So to me, it's when you remember the time, is that the market really pulls back then. So do you think that this will happen soon? Now, we all know that now everybody is betting that there'll be another 25 basis point rate hike, and that's about nearly 72% based on the 26th of July meeting. But on the 20th of September meeting, it seems that, right, people are also expecting that another hike. So basically now the market is anticipating 2 rate hike to push into the Fed funds to 5.6, but my personal belief, this can go even higher because you can see BOE itself is actually looking at to increase it, and they may go to even 10%. All right, and of course, other countries, they are also considering to increase interest rate because the inflation is ridiculous. That tomorrow we'll be talking about the inflation story, and I'll tell you this is kind of bad. Now, the S&P forward PE ratio versus treasury yields right now is actually still not at the fair price. I would say that if you buy right now, you're still buying at a high price at 18.22x. So a pullback to something lower, like maybe we can come down to about 14, that will be the best bet itself. So of course, to have that, the market need to drop at least by 10 to 15% from where we are right now to give a good call on this. At the moment now, the treasury yields curve inversion has deepened. All right. And the last time we saw something like this, we know the banks got us into trouble. So again, this speaks for itself. So to me, I think within the next 2 to 3 weeks, we could see something happening on the bank sector. I'll tell you more in details. Because now, look at the KBW Nasdaq Bank Index. Now, this is the index that I'm watching very closely. And of course, when it recovers, all is good. But last week itself, this counter down by as much as 5%. And of course, this is again going back to the very critical level that what happened back in 2020 itself before the market really settled down, and of course the stock market go into mayhem. So guys, this is a warning battle. Now the thing is this, what is this all about? Some of you may ask. Okay, so KB Bank Index is a benchmark of stock index of the banking sector. Okay, the index was first developed by investment bank KBW, and basically it specialized in the financial sector, and it includes a weighting of 24 banking stocks selected as indicators of this industry group. So which means that right now, if this index is coming down, probably it's because something bad is probably happening. So while we are looking at the market going up itself, the banks are not doing well, and this is not a good sign. And if you look at it right now, this way it get very, very scary. Take a look. Now, what I did was I superimposed the Dow Jones chart to the KBW index, and you can see that they move in tandem. All right, they really move in tandem. So when what happened in 2020, when the index had to fall, the Dow Jones also fell pretty dramatically. All right, the Dow Jones is the one in the purple line, yeah, the one in candlesticks itself is the KBW. So when the bottom, right, the KBW bottom, and that is where the Dow Jones actually bottom at the same time. And of course, look at them, they really move in tandem, and every time it's going to be U-turn, the market will react accordingly, right? It's really perfect until recently. All right, recently things start to really change. You can see right now the divergence between the Dow Jones right now versus the KBW. Look at the divergence. This is ridiculous, okay, guys? So there's only 2 reasons for that. Okay, one, somehow someone is really supporting the market and holding the market, or the Dow could really free fall, and this could really end bad because that means the Dow could go down all the way to 24,000. Now, the thing is this, the Dow is trading at 33,000 right now. To expect the Dow to go to 24,000, I can tell you this, many investors will flip, okay? So I'm not going to say that it will happen, but the thing is this, based on the historical movement, they do go in tandem. So now the divergence itself is very scary, don't you think so? So to me itself, I'm going to play the devil advocate. I don't think it go down to 24,000, but definitely pulling back down itself in the near term is highly possible, unless the KBW turn around and go back up again. But the question is how? I can't see how they can do that in the near term. So because right now, right, look at the Nasdaq volume 1 year seasonal pattern. This is a typical summertime trading low. So you can see right now, based on what we're seeing, the movement is kind of moving with the so-called seasonal pattern. Hence, therefore, we should expect quite a terrible start of July. The first few days won't be too good before a bottoming out. Then after that, in August, there's another wave of selling. Now, this is an area that I think that the market will hit downwards. So what do you think? Do you think that the NASDAQ will follow through? That's whereby you make your own decision. For me itself, I am expecting the market to really hit the bit of low end by August to September period. And that's whereby we're going to have a lot of people saying that it's time to sell the market, that we can start to buy back a little bit here and there. Now, the thing is, it's true, the Game of Trades, one a YouTuber, is mentioned that the tightening financial condition is in process right now. The spread between the 10-year yield and treasury yields and a real natural rate is really catching up. So if this actually speaks for itself, whenever you see this movement, we're going to see recession coming in. All right. So traders, you need to be very careful on this. And of course, we all know that usually when we are about nearly the 10 to 12 months into after the inversion, we're going to see unemployment data starting to surge. And this is something that we are seeing right now. And of course, when that really happens, the Federal Reserve will consider to lower down or pause interest rate hiking, and that usually signifies the start of recession. So that's the reason why I can tell you this, we are very, very close to a pivot. So that means that a few more rate hike and that's it. Federal Reserve will say that, okay, enough is enough. We need to be careful, and then things will develop from there. So with this chart itself for the S&P 500, it's pretty clear that we are basically now coming off. So I suspect that the first support will be roughly at about 4,300. Now, anything lower than 4,300, this may really spiral down to the 4110 level, okay? Because the last time when this happened, the market down by 9.24%. So if we mimic this whole thing again, to be down by 2.4%, we may have to see the 4100 level for the S&P 500. And of course, last Friday, we do see a very heavy trading volume, and with the RSI moving downwards itself, traders just to be careful. Now, I repeat myself one more time. I don't expect the market to crash. I expect the market to go down slowly. But of course, again, there'll be intermittent recovery. So please don't quote me that, oh, every day when the market goes up, I'm wrong. We look at it as a broad pace, okay? A broad space of how the market will react, all right? And of course, at the moment now, we can see this is actually showing effectively the fear and greed index has pulled back down from the 83 level, and something that I need to warn you guys, because now the VIX itself and versus this is the Dow Jones, right? Let me take a look on this. This is just a VIX. Okay, this is a VIX alone. All right, so VIX itself, right, is trending downwards, and I still think that VIX is a good time to buy. For those people who don't like to short, if you like to buy something, then try consider to buy VIX between 11 to 13. I think this is going to be a very, very safe bet. And I think that this is oversold at the moment, so you can consider doing that. The last base itself is about 11 to 12. And that was back in 2020 before it shot up all the way to above 50 zone. That's the reason why I think that now it's a good time to buy some VIX, okay? And if you compare this VIX with the Dow Jones at the back, oh gosh, you can see right now, every time when the VIX basically hits about 11 to 12, that is where the Dow Jones start to peak. And of course, we can see the selling. Now there's one wave like this. The last time we can see VIX was trading 14, there was some selling again on the Dow Jones. And when it's 14 again, there was some selling. So now if we are lower than that itself, I suspect that there will be some selling on the Dow Jones to bring it down to 33,000 or even 32,000 level. All right, what do you think, guys? Let me know in the comment box. Remember, guys, just go slow for these 2 days. There may be itself, there could be some bottom fishing later. All right, this is Cal signing off. Take care. Have a great day. Bye-bye.